when you step into an investment, you have to also think who's going to buy it from you, and then how are they going to think about getting out of it down the road.
Yeah. I mean, so another one of my pieces that was one of my favorite pieces is the institutionalized belief in the greater fool.
That was a great one.
And I think that the reason that it's so important is because it reminds me of this idea. I've never actually, I probably did in the piece and I went and found it. I can't remember if this is a Buffett quote or something, but it's basically the idea is like when we think about an efficient market, it's basically you trying to predict what the market's going to do. What's the stock price going to do? How's the company going to do? Whatever. And the reality is that the way the market is set up is that you're not trying to guess what the market's going to do. You're trying to guess what other people think, like what other people guess the market is going to do. So you're doing this like second layer psychological implication training, right? And the problem with that is that our psychology is all over the place. But you can see this, it's like, look at like, it's like every time you see a meme stock, and meme stock is actually like really difficult to like pin down because every stock can be a meme stock at different times, right? So it's like, I don't know if you saw this, what's her name? Sydney Sweeney or whatever.
The Levi's ad.
Yeah, so she does an American Eagle commercial.
American Eagle, yeah.
And American Eagle stock pops off 18% in one day or whatever, right? And it's like, that's crazy. Or like, it's like the stuff like it could also be negative, right? Where somebody does something and it's like the stock on, what was it? It was like the Budweiser commercial that people hated or whatever, right? Yep. It's like stock plummets and whatever. It's like that shift of like psychology drives markets. Like Kyla Scanlon is probably the person who's written some of the best stuff on this. But a lot of the stuff that she has talked about is this idea that like, narrative and story and vibes have become tangible economic drivers, which did not used to be the case. And the reason it didn't used to be the case is not because we haven't always been stupid and crazy and like excited about stories. It's because we weren't nearly as good at telling the stories and then getting them to everybody and letting everybody react financially to those stories. But now with the internet and social media and everything, it's like we can get those stories out very quickly. We can have them drive an implication very quickly. And everybody has an app on their phone that that can drive hundreds of billions, if not trillions of dollars of money moving around based on that story. That's never happened. And we don't know how to deal with that.
Run the Numbers is a mostly LLC production. Yelling an intro by Fat Joe. Artwork by some AI thingamajig. Podcast and video editing is done by Cleancast at cleancast.io. Nothing said on this podcast is intended to be business or investment advice. It's the sole opinion of me, a guy who feeds his dog too much ice cream and has a history of net operating losses, LOL. If you like this podcast, please hit subscribe. It would mean a lot to me. And also check out mostlymetrics.com. That's my newsletter where I explore business models and financial metrics. Thanks for riding with me. Share this with your friends. Peace.